let's say short puts which have got accumulated there. Now it's of course debatable whether they are all short puts or there are long puts also, but then there is a very large significant amount of option position which is open at 5300, which makes a lot of people feel that this would be a decent level of support. But using the option analogy, or rather the futures analogy, I would think that if you look at the spread between let's say Nifty and June Nifty, it's been actually sort of going completely out of whack. We were about 14 points to the premium about June, and progressively we have now sunk to about 11 odd points to a discount to June. Now this typically happens when there is a pressure of short positions which are getting rolled forward. So the very fact that you move from a premium status to a discount status clearly shows that there is still a lot of positions which are short to be rolled forward, and I think that which is why the market is getting pressured more and more, because of a very large amount of short positions which have actually got created. So no respite as yet, but like we said, 5300, will the option position really protect us? That actually remains to be seen.
Dr. Narayan, the other bit is on some of the IT large caps which have been some of the principal contributors to the fall today, Infy, TCS, Wipro. And Infy in particular, I remember a lot of people when the numbers came out and weren't too great, mentioned that the band would be 2800 to 3300, and in 2800 you would see a lot of buying. It is now below that level convincingly, though not at the lowest level of the day. What do you do with Infy or any of the other 2 or 3 large cap IT stocks?
See, for an Infy, it has also actually created a kind of a price pattern which indicates a target up to 2300, and this was something we had discussed not with you in this show but with Devina actually, I recall a few days ago. The price pattern in Infy daily chart clearly suggests that that stock is on its way down, whether for reason A or reason B is largely irrelevant. So we are looking at about 2300, so the band is actually 23 to 28 and rather than 28 to 33. So I think from a trader's perspective, Infy is clearly a sell, and I would say it's a bit of a positional sell, so you should look for, from here to about 100-150 points higher, in which you can actually build your position down and expect about 2550 as your first halt, and if things don't really improve from there, maybe 2300. As far as maybe TCS, Wipro, etc. are concerned, they're not half as bad as Infy. In fact, HCL Tech has actually dropped down into a bit of support zone. But, as you rightly said, the whole of the IT space is a bit pressured. So maybe they're just falling in the wake of Infy, but I think the one which is tradable from a positional angle would be Infy short.
Alright, the other stock from the mid-cap space as well is not just the large cap IT boys. Patni, which gained quite a bit yesterday, is down close to 6%, 300.